Well, the Nifty and the Sensex post minor gains but ended in the green for the third straight week. The banks outperformed, with the Nifty Bank posting its biggest weekly gain of 2024. Private banks gained the most. Hello and welcome to the Editors Roundtable. Over the next 30 minutes, we decode the week's market action and put the spotlight continuing trend of stake sales in multinational companies. I'm Sonia Shenoy, with me Surbhi Upadhyay and Nimesh Shah. Also joining me on the show today is Mahesh Patil, the CIO at Aditya Birla Sun Life AMC. Mahesh, thank you so much for being with us on the show. Well, you know, it has been a very volatile last couple of days, but give and take everything, this market, after a big run last week, is just consolidating, buying time around these record high levels. So not such a bad outcome at all. Not such a bad outcome. In fact, you know, despite a truncated week, it looks so long, right? I mean, we feel like, every day there are so many block deals, there are so many stake sales happening, reporting every day to come and talk about this block, that block. And I'm sure, you know, Mahesh was equally busy participating in most of the blocks of this week as well. But again, you know, looks like there is more of churn happening within sectors as well. This week belonged to the private banks, a bit of surge in the private bank stocks. A lot of the laggards of the last few weeks have seen a bit of bounce back as well, and a bit of profit booking in metals in some of those sectors. So looks like this momentum is going to continue purely on back of what Mahesh and the team domestic mutual funds are doing. They're just buying out every promoter and every MNC. So I think that's going to be the trend, I guess.
No, absolutely. Nimesh has had a really busy week because every day he has at least, I think, 6-7 block trades to talk about, to tell us who could be potential buyers and what's happening. But Mahesh, thank you so much for dropping into our studios. It's great to have you here. It's like finally pausing for some breath, right? After the roller coaster run up to the elections, the announcement, digesting what has happened. And now, I guess, just anticipation, waiting for the next event, and that's the budget. How have you sort of, let it all sink in?
Yeah, no, so it's been a kind of a volatile week in that sense. I mean, the budget day, the election day was the best one. I think the idea is to stay cool, right? Because we've seen that everything really bounced back to this level. So again, we can't react as much being a large fund house. I mean, you have to be positioned in stocks or sectors where you think, which will withstand any kind of volatility. Obviously, they'll follow the market, but with less. So I think in this kind of a market where we're seeing a lot of pockets where there is a lot of exuberance which is there because of the large liquidity which is coming in. I mean, idea is to try to focus on better quality names, right? So you want to not get carried away, because of price action and momentum, which is happening in a few pockets. But I think structurally the markets is still in good shape. I think we've seen after the elections, policy continuation is there. There should be steady growth. Obviously, the markets have rallied quite a bit, so there could be some consolidation. But I think this is a time where we see some amount of sector rotation. I mean, the big winners of last year, right, which has been some of the cyclicals, the industrials, the capital goods sector, the PSUs for that matter. I think you could see some rotation coming through because it was more investment-led. I think post-election, I think you'll see the budget probably whether the lean is more towards trying to stimulate consumption. That has still been lagging. If you look at the economy, that is still well below the pre-COVID trend. And if that's the section of the economy also which comes, then we'll see some of these stocks related to that, whether it's consumer discretionary, consumer staple, that could see some interest coming in.
In fact, you know, we had a very interesting discussion with one of our consumer durable companies a couple of days ago, and they said that there is so much traction now coming in, especially from some of these pockets like real estate, infrastructure, etc. And now the capex that they've invested in, now they're seeing the fruits of that. But apart from that, the other sector I wanted to ask you about was IT, because this week IT was back in focus, with Accenture giving out their guidance and numbers, etc. But your thoughts overall as we head into the earnings season as well, how are you positioned on the IT names?
So IT sector, we are kind of a neutral-ish because it's a sector which looks to have bottomed out in terms of at least its earnings trajectory, right? I think last 2 quarters or 3 quarters, we have seen some downgrades in the IT sector. I think from here on, I think the downgrade cycle looks like behind us, right? So most of the negatives are priced in, and we are seeing some early shoots in terms of the new orders, if you look at it, right? Especially the big transformational projects. I think those orders are coming in, but they are slow to execute. Discretionary spend is still weak, but we are seeing from the BFSI sector, like globally, things are looking to have bottomed out. So this is a sector, I think where if you are trying to be counter-cyclical and trying to take a contra call, it could be a good sector to look at slowly, because I think in a market correction, if at all, then this sector should outperform because it's underowned. Again, a lot of FIs, if you look at it, is probably the most underowned sector in that sense. But it's not going to be, again, a very high growth, right? The growth will still be muted. I think as we move into the next 2 quarters, you will get more visibility. And that's where I think one can build in this space. I think structurally, we think that IT spends are going to only increase, right? The way things are happening, I think there's not to be any kind of a slowdown over there. Currently, companies are just waiting and watching over there. So it's a good sector to accumulate, I would say, at this point in time.
Sure, absolutely. I guess we haven't seen any company come out with a decidedly upbeat commentary, but at the same time, no one's saying it's getting worse. They're saying that, incrementally, it should get better from here on. We caught up with Mohit Joshi. Last Friday we were speaking with him at the Mahindra Investor Day, and he said the same thing, that the environment is definitely better than where it was a couple of months back. So the optimism is on. Just very quickly, before we move on, I thought I'll put some numbers and stats for this week on the table as well. So what has the market done? Consolidation means the Nifty is virtually flat, absolutely nearly unchanged, 0.1, 0.2% kind of a move on the index. It's been a better week for the broader market. The mid-cap index is up about 0.5%. The small-cap index is up a little over 1%. But the big story, the big trade of the week has been the revival in private banks. The bank Nifty itself has done very well. It's up almost 4%. The private bank index is up 3%. And PSUs, they've kind of fallen off the radar a little bit this week. Some profit-taking coming in the overall PSU basket and in PSU banks, which is why the PSU bank tally for the week is actually a negative 1.2%. Now, what has triggered the interest? It's very simple. Bank stocks follow the money, and the foreign money has started showing up this week. So if you look at the weekly inflows, we did have a couple of positive days, and more importantly, for the month of June, the net number has turned positive from the FPI fraternity. So what is the number? The June net inflow number is now about 11,000 crores. Now, mind you, these are final depository numbers, not provisional numbers, and they also take into account whatever's coming in through these blocks. But for whatever it's worth, you've got 11,000 crores of FPI inflow coming in, contrasted with about a 26,000 crore outflow in the prior month. So FPI numbers have come in. Now, is this going to be a building trend, lasting trend? This is the big question, and we'll ask Mahesh that in just a moment. So where was the profit taking? It was quite evident in the auto space, one of the best performing parts of the market. So stocks like Mahindra and Mahindra, Maruti, even Hero, Moto, Bajaj, all of them lost a little bit of ground today, today and over the last 3 or 4 sessions. The other space, as I mentioned, was PSUs. And interestingly, FMCG, though there is this anticipation of, boosting consumption at the bottom of the pyramid, it's not really showing up in FMCG stocks. It was there on the day of the result day when we got the election verdict. But since then, the market's kind of moved on because of continuity, etc. And the focus has come back to some of these capex stories. The short point is this week, the FMCG index was an underperformer. Now, IT, we've discussed. IT is beginning to see a lot of tactical buying. Also, mind you, the rupee was weakening throughout this week. In fact, it hit a fresh all-time low on Thursday. So that's something to keep in mind as well. IT is definitely getting in the buying. Now, the big events are over. Elections done, the Fed meeting is done, the RBI meeting is done. Going forward, it's going to be all about the budget and a lot of these pre-consultation meetings that are happening. And also, when we come back on Monday, remember the GST meeting would be over and done. And the anticipation of that meeting kept some sectors, like fertilizers, for instance, very excited through the course of this week. So I guess it's going to be more of this tax talk and what's going to happen in the budget. Will some sector get a sop? Some of this chatter perhaps is going to keep the market excited.
Oh, absolutely. Mahesh, what's your call? Because you spoke about consumption as a theme. Do you expect anything from the budget for a revival or some sort of boost for the consumption sector stocks?
Yeah, so I think, again, consumption is not only in the budget itself. I think it's also about how the monsoons, because rural is, again, a large, if you look at large population over there, and that has not done as well, right, if you look at last year. And if monsoon is also good, I think then that's the real demand side, okay, a stimulus, okay, which is much more sustainable. But I think there will be something at least to make feel good, especially on the rural side. There could be some increase in the allocations, okay, which are given to the farmers, right? We are seeing also some measures been taken to boost housing, because while housing, we have seen the premium housing has done well. I think the affordable housing has still not seen that kind of a boost. So those are the areas, okay, where you could see some because this year the budget, there is some extra provision which is there from the RBI dividend, right? There's almost 1 lakh rupees more than what it was last year, and that's where there will be some room for the finance minister, okay, to see how it really deploys that.
Correct.
So I think, given that, but again, it has to be supplemented also, okay, by good monsoons, because just trying to give some dollar will not be good enough.
But Mahesh, so just quick follow up on that point. What in your mind is the best way to play bottom of the pyramid consumption? Would it be FMCG? Would it be some of these housing finance companies? Something else?
Or maybe like a QSR, because they've not done anything in the last one and a half year.
Yeah, so I think, again, it's not only the bottom of the pyramid, also it's the middle, right? If you look at it, even that segment of the population has also been impacted over there. So I think the better way to play that is through, say, consumer discretionary, some of the consumer durables, right? Okay, that's also because they're also getting aspirational, right? And again, while a lot of retail credit is also coming in and helping that, but it's also a feel-good factor, right? When you spend on these aspirational stuff. So I think that's an area, okay, consumer discretionary, whether it is the QSR space, whether it is the retailing sector, the consumer durable sector. I mean, these are the sectors where you could see a kind of a marked shift. I mean, consumer staples, only you will see that much increase over there, right? Sure. Beyond a point, I think that's not something which is aspirational. So that's an area where I think which has clearly lagged behind in the last 1 year, okay, which structurally also bodes well, right? Because as India, as the per capita income goes up, naturally you will see a much bigger growth over the next many years. But temporarily, I think if this boost comes in, okay, you could see a better takeoff in some of these categories.
Okay, I have some questions for you on individual sectors as well. But before that, Nimesh, what are you tracking today?
Well, Sonia,
deals,
right? This week, Sonia, 25,000 crores and counting. That was the amount of block deals which have happened. And again, this week was largely dominated by MNCs, right? 3 large MNCs have sold big chunks into the Indian subsidiaries. So to start with, Indus Tower, Vodafone PLC sold 18% stake in a single day, and they've raised 15,000 crores by selling that 18% stake. They've very clearly mentioned that they will use the proceeds to pay off or to repay the lenders. They'll still be holding 3% stake in Indus Tower. That was a large block deal. The second block deal was ZF Commercial. WAPCO, which owns 75% in the Indian arm, they sold nearly 7.5% stake in a single day and have raised close to 2,800 crores by selling that stake in the Indian arm. So that was second large block by an MNC. The third was Gland Pharma. In Gland Pharma also we saw Fosun, which is a Chinese parent company. They sold nearly 6.5%, nearly 6% stake, and they've raised close to 1,800 crores by selling that stake. So they were owning close to 57, now will be close to 50%. So these were the 3 large block deals where MNCs participated for this week. But that's been the trend as well. It's not the first thing, or maybe it's not the last thing as well. If you remember, I highlighted in the past as well. If you look at the past few large block deals from MNCs, Timken stands out in May 2024. The parent company sold nearly 6.5% stake. They sold a second tranche as well very recently. So Timken was a large block. ITC was another large block where BAT sold 4% stake, and they've raised almost 17,000 crores by selling that stake. So that was another large block. And the last was Whirlpool. In terms of size, that was the largest. 24% stake was sold by MNC in an Indian arm, and they raised close to 4,000 crores. So these were some of the large blocks where MNCs participated. But even in general, a lot of promoters, a lot of strategic investors and PEs have sold large chunks in the last few months. Mahesh, you've been tracking these whole block deals. I guess as a house, you'll have participated as well in some of those. How do you classify between like participating in an MNC deal and like in a general deal where a promoter is selling out?
Yeah, so I think again one has to look at, say, normally when the markets touch new highs, you see some promoters selling, coming in, people, whether it is PE investors or promoters want to encash some, okay, to meet their other requirements, right, which is there. So I think in that, specifically in the MNC space, again, we run a large MNC fund also. I think in that space, normally in these companies, you don't see any liquidity because they don't really fundraise. Most of the MNC companies, you hardly see them coming in with a secondary, with the primary issuance which is there, right? So the only way to get that is to some of these liquidity events which come in. And some of these companies which you have talked about, I mean, they are not selling because they are negative on India or negative on the company. They have certain compulsions, okay, in their parent company. It could be higher debt, okay, and they find that, okay, probably that is with still maintaining control, right? Okay, if you can get some money and repay that debt, I think that will ease their problems, okay, in the home markets. So what we look at is whether the business itself or the industries where the opportunities is good, right? And whether these MNC companies are committed to the Indian operations, right? Because that is most important. It doesn't mean that once you sell down, right, it should not happen that their interest in the Indian operations, okay, whether they're still committed, and that's a comfort level which we now normally tend to get. And if the opportunity is good, then there will be continuous flow of technology and new products, okay, which will come into the markets as Indian markets mature. So this is a good opportunity to buy some of these good quality names, right? And look at it. And they're not so much bothered about the valuations and trying to really say that they want to
Which
get
is
the
what
best
I was
price.
getting to, exactly. I mean, they're selling not with any malified intent.
Yes.
I take your point. But
just
is
that
there
they're selling
selling
and buying back their
indicating-
parent, which is
Yeah.
at a very, very...
Perhaps, yeah, they-
Obviously, the valuations when they compare, right, in India.
People ask, is this a top,
compared to
at least
that.
a near-term top? Because, all
Right.
the so-called smart guys are selling
Right,
out.
right. No, obviously, the valuations in India, if you compare in the home markets,
Oh,
they are much,
absolutely.
much higher.
Oh, yeah.
But then if you look at it in the context, the broader market in India itself is expensive, right? So one has to look at relative valuations, okay, where it stands. But again, when you buy in some of these names, we don't look at, say, over the next 1 year, right? Because here to get entry, some of these quality names, right? Even at not you can get it, never get it cheap, right? You're buying it with a longer term view, really long term view, right? We structurally like, if you like, these companies. And that's the only place, okay, we would look at in some of these promoter selling, because promoter selling, you have to be more careful.
Very careful.
Yeah,
Yes.
absolutely. We have many more questions for you, Mahesh, so do stay tuned in, all of you. We're going to take a short commercial break. We'll continue to decode the week on Dalal Street on the other side. Stay tuned.